In this video, we're going to talk about why I love Chapter 13 bankruptcy. Really, I can break it down to one word. Chapter 13 bankruptcy has flexibility. Chapter 13 bankruptcy allows you and the court to sort of manicure a bankruptcy that can fit your individual needs, complexities, desires, and at the end of the day, your style of life. Now, let me explain that a little bit more. The reason California homeowners love Chapter 13 bankruptcies is because Chapter 13 bankruptcies can save your home. Unlike a Chapter 7 bankruptcy, if you file Chapter 7 bankruptcy, there's no repayment tool to save your home if you're behind on your mortgage. So if you're, let's say, $30,000 behind on your mortgage and you can't come up with $30,000, then a Chapter 13 bankruptcy is typically a very good option for you. An option before filing bankruptcy, of course, is doing something like a loan modification. Coming up with the money is always great, but in this video, we're going to focus on the Chapter 13 option. So if you're $30,000 behind on your mortgage and you don't have access to $30,000, but you don't want to lose your house, explore Chapter 13, because that $30,000 can be spread out over a 60-month payment plan. 60 months, if you have 60 months to pay back $30,000, that's $30,000 divided by 60 equals $500 a month. You would have to pay back your normal mortgage payment, okay? So let's say your regular mortgage payment is $2,000 a month. Once you file Chapter 13 bankruptcy, you do have to pay that $2,000 regular mortgage payment per month. And then on top of that, you would have a $500 payment to pay back your $30,000 mortgage arrears. Now, Chapter 13 is great because it allows you to keep your house, pay back your mortgage arrears. It will also allow you to figure out ways to pay off your unsecured debt. So unsecured debt, mainly credit cards. If you've got a bunch of credit card debt that you're drowning in, you can also use the Chapter 13 to pay back that credit card debt. Now, depending on how much money you have and depending on what type of assets you have, I should say the value of those assets, not the type. It doesn't matter if it's a piece of real estate or a business or money in the bank. So it's not the type of asset, but the value of that asset also determines how much money you have to pay back your credit cards. Very easy. If you have a bunch of assets worth a bunch of money and you've got really strong income, you're gonna have to pay back a good portion, if not all of your unsecured debt. But if you don't have a lot of assets, let's say your only asset is your home, and that home is within the homestead exemption in California, and your income is good enough to make your bills, but is not showing a ton of money left over every month, then you have the possibility of paying nothing back to your unsecured creditors or very little. The payments to your unsecured creditors is done on a percentage basis. So the maximum percentage, of course, is 100%. You could pay back 100%. The minimum, of course, is 0%. You could pay back 0%. But then again, the word flexible, there's flexibility between that 0 and that 100%. Okay, so we're talking about Chapter 13 saving your home, keeping you in the house, creating an affordable monthly repayment plan. We're talking about dealing with your unsecured creditors. It will also deal with your priority debt, which is typically tax debt, right? If you owe the IRS or the Franchise Tax Board a bunch of money, you can also use bankruptcy to make those payments. So instead of the IRS garnishing your wages, putting a lien on your house, we can term out those payments over the same 60-month plan. Lastly, I'll leave you with another example of flexibility. If your lifestyle changes, if you lose a job, if you get a pay decrease, if you're struggling, if you have to take some time off, you can work with the Chapter 13 trustee and the Chapter 13 bankruptcy court to sometimes minimize payments for a couple months or suspend payments for a couple months and then pick up those payments later. So there is a level of flexibility within reason, right? It depends who your judge is, it depends who your trustee is, it depends how you've been doing in your case, whether it seems like it's something you can do. Is it a long-term issue? Is it a short-term issue? But nevertheless, we have clients all the time who are in 5-year bankruptcy plans, right? Think about it, 5 years is a very long time. So those 5-year bankruptcy plan people are contacting us and saying, hey, I missed a couple payments. What can I do? And then we fall back on the flexibility of Chapter 13. How can we arrange this situation to keep the bankruptcy alive, to get you to the discharge date, as long as everybody's acting in good faith and doing what they need to do? So those are just a few pointers of why I love Chapter 13 bankruptcy. I hope you enjoyed the video. Any questions, comments below, or just reach out to us directly at sternberglawgroup.com. Thank you so much. Always a pleasure. My California homeowners. Thank you.